Hello everyone to this new live webinar for today, 19th May 2020. This is a Q&A webinar. As you well know, you know how it works. I'm gonna go over certain assets. It doesn't really matter if it is a Forex cross pair, an index, stock, Indian or American or Martian stock. It doesn't really matter because the rules apply the same to every single asset. This is a trading disclaimer. You can pause the video, read it at any time. Okay, so let me start. Okay, I've got a list of assets over here on the right side to go over, but as always, I will ask you to, you can suggest any asset, Forex, stock, anything. So we will add it to my list and we'll try to cover it together with all this, as always. So let me read something. Mohammed was planning Monday on fundamental analysis indicators. 3 months war. Well, he's Mohammed. You wrote in private. You are asking me if we should avoid trading when we have such major and direct impact in our trading with the COVID. Well, if great imbalances, as you can see, the COVID-19 pandemia or pandemic is in Spanish, pandemic, sorry. Price reversed, pulled back to a very strong 3 month and 6 months areas of demand and rallying from it. It doesn't really matter if half of the world is dying because it doesn't really matter after all. It's a pity and it's sad to hear that, but as you can see with the markets, if we take a look at the S&P 500, okay, this is the strong drop-off on the weekly and also, well, one sec, this is the monthly on the right side. This is the COVID-19 effect, okay, fear, and then price just retraced to the 6 months area of demand over there and then rallying strongly, and it has almost recovered everything that it dropped in the last 2 months. Well, almost 3/4. So it doesn't really matter, okay? As long as we have a super strong area of demand over there, which is a 6 months, 12 months areas of demand. Come on, over there. Very close on the 12 months. We have a little bit wider, very low in the range. We've got also the Nasdaq that reached the 6 months area of demand, as you can see there. So all these, Mohammed, all these drop. Look at that. Look at the price action on the 3 months. Strong drop. That's the pullback to the 6 months area of demand. No consolidation away in the 3 months, and then rallying. And look at the strength of these 3 months bullish impulse. Do you think this is weaker or stronger than the previous one? I mean, you can say, okay, I'm going to stop trading with this such a big event like the COVID, but that what it did really is that it made every single stock in the world super cheap, also the indexes, and allowed the long-term investors to buy at very, very cheap prices. As simple as that. It's sad to say, like I said before, because after all, we're just numbers, retailers that are feeding the bait for all these professional traders that are just using their algorithms and robots and all that to just earn money with anything. I mean, that they don't care if hundreds of thousands of people are dying. They're just buying, and that's it. As simple as that. I mean, we're just numbers for them. So if we can join them without hurting anyone, okay, we can go ahead and do that. Okay, makes sense? And this is, I mean, just look at any of the stocks that we've been analyzing in the community and all the analysis that I've been doing in the weekly and video analysis for the stocks and all that. It doesn't really matter. I mean, there's super strong levels on like limited brands, okay, where I'm long down there, 12 months area of demand, super strong. So does the COVID really matter? Well, not really. That is the drop, the sell-off on the weekly, on the monthly, that helped price to reach the area where we are expecting to go long at super cheap prices. Like a year ago, the limited brands LB was at around $70 per share, and now it's at $10 per share. So that's 7 times cheaper than before. What do you think? If you got money and you believe in this brand, because now many shops are closed because of many people have been laid off, unemployed, and all that. So right now it's super cheap. This is an apparel footwear retail shop. So right now people are not visiting too many malls and all that because they are closed because of the COVID. But once all this, the lockdown mode is more smooth or smooth out, then people will start buying again, and then this brand will start getting strength again and rallying from this super strong area of demand. And if you were looking at this strong imbalance, okay, then you would be long over there, expecting price to rally in the next year, 2 years to $60 or $70 again. Okay, makes sense what I'm trying to say. Welcome, Adam. And if you don't believe me, just look at the analysis that I've been doing. Look at any stock, 3 months, 6 months, 12 months average of demand. COVID, what is that? I mean, that's just something really bad. But, I mean, just look at this and you will understand what I'm trying to say. It doesn't really matter. And, okay, Euro, first of all, EuroSec, one sec. EuroSec. And then someone else, Mohammed also, Mohammed Kabesh, gold. Okay, gold, what do you mean? Gold cash or gold, Barrick Gold, the stock, Mohammed? Which one are you referring to? Well, okay, spot. This one is being analyzed every single week in the weekly video analysis. Are you watching it? Because it's analyzed in a lot of detail over there. Well, this one, as you can see, Laura, okay, most of you are writing in private so nobody else can read you. Well, maybe you have your reasons, but Laura is asking about no strong move away. I mean, you're saying that this is not a strong move away or the reaction, because we already have a daily average manual control, okay, after overextension. So daily average manual control, and then price is rallying, a lot of room for price to reach $22 area and even higher and higher and higher, okay. Well, I don't know, Brian. I think it was set up like this. So maybe I don't know if this is set up for private forum or private meeting right now. Let me see. One sec, share computer. Oh, more control. I just don't know how to change it. Okay, it doesn't really matter. This is the second time that I use this one. Okay, no problem. Let's not waste time doing this. Okay, good. So let's do this. Let me clean this. Okay, clear that. So let's start with EuroSec, then with gold. But like I said, Mohammed, gold is being reviewed every single week in the weekly video analysis. So is there a particular question about this? Because in the weekly analysis, it's being analyzed every single week in a lot of detail. So do you have a particular question about gold? Okay, so EuroSec, what can you tell me about this one? Anyone? What is your bias, longs or shorts right now? Because here, as we can see, it's been rallying strongly. Okay, this is supply that eliminated demand, eliminated over there. So there should be an area of demand over there in the 3 months, right there. And look at the monthly. Bullish impulse, engulfing pattern, but look at the pink candle, not able to close, classic resistance, dark cloud cover, potential, sorry, clicked the wrong button. Shooting star, bearish pink candle, no set and forget longs over here. That's the EuroSec analysis. So this one, we are having a weekly area of demand over there as well, which is in control right now, more or less over there. But this is not a set and forget type of level, because look where we are. We have 3 months not consolidating away, okay? We've got monthly not consolidating away, and the weekly area of demand is pretty strong, really. There's no set and forget level there, and we have, I don't know why I did, okay, the engulfing patterns is not there. We've got bearish engulfing pattern on the daily and dropping into this area, and look what happened right here on the weekly. A bearish engulfing pattern created right above the weekly area of demand. We have covered this in a lot of detail in previous webinars and also in the weekly video analysis and all that. Let me ask you something here. We've got this candle here. This is a weekly candle. Both of them are weekly candles. So this one on the left, the bullish one, took 5 days to be formed. Okay. What about this one, the red one? How long did it take? Okay. 2.5 days. Well, today is Tuesday. The day hasn't ended yet. So it took 1 day and a few hours, roughly 2 days. So which one wins? The bearish one is much faster. It's like almost 3 times faster than this one. We don't want to have a bearish engulfing pattern right above our potential entry. If we had the bearish engulfing pattern like there, okay, that's fine because there is a lot of room, there is profit potential. It tried to reach that area, but now right above the weekly area of demand, we do not want that. And if we had like the bullish candle like this, okay, and then the bearish candle was like 1 day, 2 days, 3 days, 4 days, it's okay. But then 1 day and a few hours, it's even stronger than the previous bullish candle. Okay, so that's not a good idea to go long. But not only that, I mean, you've got other characteristics on the bigger time frames. We've got 3 months bullish engulfing pattern, well, impulse not able to consolidate away, like I said before, not able to consolidate away on the monthly either. Bearish pink candle, potential candle like this at the end of the month, very strong bearish candle, stronger than the bullish. So set and forget, not possible. Short counter trend are possible. Okay, Troy will add O and CSX. Okay, O and CSX. Okay, good, perfect. So let me read your questions. You can't read other questions, I don't know why, but I'm going to read them for you. The 3 months supply, current supply should be the last station. However, according to the current situation, it may rally high. What is your advice? But what are you talking about, Mohammed, here? I don't know which one. We are right now analyzing the Eurosec. So I don't know if you are referring to gold. You shouldn't be referring to gold because we are analyzing the Eurosec. So it's going to be very difficult. So if you ask a question, Mohammed, or anyone, please state the ticker or asset you are referring to and the time frame. Otherwise, I just cannot read your minds. Okay. Okay. Okay, 12 months supply zone over there as well. As who said that 12 month supply zone? Let me read over there. Okay, Brian. Okay, very wide, but to 12 month supply zone. So going long. Okay, with all this against you, bearish pink candles, bearish engulfing pattern, it's not good. I mean, the monthly and the 3 months are in the middle of a bearish retracement. So you shouldn't be looking to set and forget. And even if you wanted to set and forget, okay, only one ERC. Okay, too many limiters. I mean, limiting your profit potential and telling you, warning you, the price might be heading more or lower and heading south. Okay, and okay, heading south. So great, Troy. Okay, good. So this is Eurosec. Only shorts are possible now. If we get that one out of the way on the weekly, that's going to be great because we already have an area of supply right there. We had a strong area of supply up there after breaking the trend line over there and eliminating the area of demand. So price dropping, shorts aggressively at new areas of supply on Eurosec. And on gold for Mohammed, we are at all-time highs. So look at the Eurosec where we are and now what price is doing on the Eurosec. Okay, look at price action here on Eurosec, and now let me change to gold, and you will see what I'm gonna why I'm doing that. So let me move this. Doesn't that resemble to gold's price action? Super strong bearish impulse and all that. So all-time highs. Price could start dropping anytime soon. Will it do it? I don't know. I don't know. But this is not the type of asset I want to have on my watch list to go long or short right now. It's just, well, it could do anything. Okay? It could do anything. So I'm not interested in gold at all. This is my advice, Mohammed. You asked for my advice, and that's all I can tell you. Do not trade it. Good? Yeah? Perfect, Mohammed. So that's gold, Eurosec. Then Venu asked again for Reliance. I think this is the third time we do the analysis on this one. So, what happened there? Okay, so what is your question, Venu? Venu, what is your question? Because we did analyze this one in the last webinar. So, well, I will continue and then we'll see what you have to say, okay? Just can't wait. So, Venu, okay, maybe someone else. Someone else said about something about Reliance. So, okay, AAL as well. Okay, so let's start with AAL, then O, then CSX. But before doing that, I'm going to do Aussie dollar. Okay, on the Aussie dollar, we've got the 12 months area of demand. We've got the 3 months bearish engulfing pattern that we can use as confluence. We've got the monthly area of supply, which is higher. Okay, we've got the weekly area of supply that was in control. And last week we had the 4-hour area of supply over there, valid area of supply that played out nicely as confirmation of these area of supply on the weekly. But right now, price is rallying again, creating the areas of demand. Okay, I was asking private in an email what to do about this one. Well, we already had a trade over there, and look at the impulse right now. We've got bullish engulfing pattern, another one, and look at the strength of the impulse on the weekly. We've got a bullish engulfing pattern now, stronger than the bearish engulfing pattern. So we are expecting that area probably to be eliminated, and price will head all the way up to the monthly area of supply, which short will be possible again. Counter to longs could be possible if this area of supply is eliminated. So someone asked that to me in private in an email, so that's why I'm covering Aussie dollar right now, even though it was covered in the community as well this week. So let me read Matt's question. Alfonso, can you please give us an example of confirmation trading when are in doubt? Okay, there we're gonna see. Well, I just explained one. So weekly area supply. Do you think, look at the strength of the impulse on the monthly, this is a little bit aggressive, so you wait for confirmation. So there you have confirmation. You've got, okay, the area of supply on the daily that was weak, So you wait for a new area of supply on the 4-hour, and there you've got your level of supply. And some members took that trade, it made like 4-5 to 1. Okay, so that's the kind of confirmation. Confirmation is a new level as a reaction to a bigger time frame imbalance or confluence in a trending market, ideally. So this one, the Aussie dollar, is in a monthly downtrend, is in a weekly downtrend, weekly area supply and control, weekly variation of pattern confluence, daily supply and control, brand new area of supply in the 4-hour. That's the kind of thing that we should be looking at when waiting for confirmation. Is that okay, Matt? Okay, great. So this applies to any market. I mean, this is Forex. So on Forex, we have the daily price action. It's much more clear because there are no gaps because we have a 24 hours market. But on stocks, we have 8 hours of trading every day, more or less. And there is a lot of opening gaps and all that. And the price action on the daily is a little bit more of a mess. Okay? So, yeah, 3 months, no consolidating away. So, but we can use that as a confluence. So that's the monthly area of supply, where we will be able to go short again in the monthly sequence. We are expecting that weekly area supply to be eliminated. Okay, any questions about this? This is the kind of confirmation. So we've got now the daily area of supply eliminated. So we should have a new area of demand over there. We would adjust the trend line connecting the latest two peaks, or sorry, valleys over there. So now that the daily area of supply that was tested already has been eliminated, we've got a daily uptrend with a bullish engulfing pattern attacking this weekly area of supply with room for price to reach that monthly area of supply. Okay, that's the kind of analysis we are doing here. Okay, trade was possible there, but with the strength of this impulse on the monthly, it's a little bit aggressive. So we have to wait for confirmation ideally. And as explained weeks ago, I remember this. Well, let's see if this wants to work. We were specifically saying that we shouldn't be looking to go short there because as a basic structure, this is very poor. Look at the strength of that bullish pink candle, the lower shadow. We don't want that, okay? We want tight levels like this one, okay, without long tails, upper or lower tails. So this is not the high probability, high score basing structure at an area of supply. Yeah, see, that would be a counter trend move on the weekly sequence. In order to go counter trend, we need the middle time frame out of alignment. The weekly is down, the middle time frame of the weekly is the daily. The daily is out of alignment for short, so we can go long. Okay, in the monthly sequence, we need a weekly out of alignment. That could be possible soon, maybe this week or next week, and then we would have a bullish engulfing pattern confluence and all that, and potentially we're going to have a strong daily average demand made of 2-3 ESC candles for counter trend longs. Okay, make sense? Good. So somebody asked about reliance again. So let me do that before I forget it. Or did I add it? Come on, I just don't know why they add this one over here. Okay, reliance. Reliance. Come on. Okay, reliance. There it is. So we did this one in the last analysis. Okay, the last webinar. So we have reached all-time highs. Okay, did the all-time highs was broken? No, it wasn't broken. It wasn't broken. Bearish engulfing pattern. We've got the monthly area of supply over there. I believe it hasn't been broken. Look at the bearish pink candle over there. So right now, if you are a trader that has stated in your trading plan that you are allowed to go counter trend or trading in consolidation with a bigger time frame area of supply and control in the monthly, now you could start looking to go short with monthly out of alignment. Okay, so now only shorts are allowed if you want to go short in this kind of scenarios. You can wait for near the supply, the demand levels at the bottom to go long with 3 months demand. Well, I believe it was eliminated, wasn't it? Yes, it was eliminated. I believe it was eliminated. No, it wasn't, by a couple of ticks. So lots of room for price to drop all the way down for counter trend shorts, longs, possible lower and near areas of demand. So that's the way to go. Now, if you want to go long there, it is very aggressive. Why? Because we have monthly supply and control. We have 1, 2, 3 bearish ERC candles. So going long there, not allowed. Is that okay? Not allowed. So we have a similar scenario on Facebook, but it could be eliminated, that area of supply. So we are at all-time highs. Look at Facebook. That was on my list over here. So on Facebook, we have, okay, these 3 months area of demand in control. Okay, bullish engulfing pattern. Look at the strength of the bullish engulfing pattern. This is the COVID effect, bearish candle. And look at the bullish candle on the 3 months. Look at the bullish candle. Isn't that one stronger? It engulfed the previous one, the body. This is the close, this is the open, completely engulfed that one. And today is the, well, we are in the middle of May 2020, still 1 month and a half left for this 3 months candle to complete. So we are expecting that area of supply on the smaller time frames. When I say smaller time frame, anything smaller than the 3 months is a smaller time frame, even though the monthly is a bigger time frame. So that one over there is a monthly area of supply, but look at the arrival into the level with that bullish engulfing pattern, okay, and the high over there already made a high. We are expecting that to be eliminated as it happened on Netflix, on JD, on Amazon, on Adobe, on PayPal or eBay, or I mean lots and lots and lots of them. Okay, this stock was very cheap, okay, to buy, and now that's what's going on. It doesn't really matter if, unfortunately, we have hundreds, thousands of contagions and deaths in the world. The economy will not stop, and the market makers and the professional traders will not stop trading and making money, regardless of the number of deaths that there are worldwide. It's sad to say that, but that's how our society works. So let me read here. Can we go through an example of zoning control in a ranging market? I mean, zoning control in a ranging market is the exact same thing as the zoning control in a non-ranging market or a trending market. So how it switches? Well, as soon as price reaches the 3 months area of demand, this could be a 4-hour area of demand, that now we say that it is in control. Do we have any supply in control? No, nothing. There's no supply here. So we still have the 3 months area of supply and control. Now we are within a monthly area of supply. So on the monthly, we say that we have the monthly area of supply in control. As long as this area is being respected and price is within the proximal and the distal lines of this area of supply, we say that Facebook monthly time frame has monthly supply and control. Imagine the price starts dropping, and there is no area of demand anywhere until here. Imagine this is an imaginary area of demand. So supply is in control, is in control, is in control, in control. Now supply is no longer in control. Demand is in control. Make sense? Here, it doesn't really matter if we have a trending market, a ranging market, or any kind of markets. Okay? It is in control as long as price is rebounding to the imbalance is within the imbalance without breaking it, and no opposing imbalance has gained control. Okay? Good? You're welcome. Okay, let me read somebody else's questions. Monthly candle is right, one like reliance. Which one are you referring to? There's one over here on the weekly, on the monthly, on Facebook menu. This is a little bit. Present month Facebook, yes. But let me take a look at reliance. Okay, the same thing. Yeah, same one. Okay, it is the same one on reliance, but there is a little bit of a difference. Why am I saying that? Because on the 3 months here, we have that price action, and on Facebook, okay, we already have price rallying higher, and on reliance, yeah, more or less the same, yeah, more or less the same. Okay, the exact same thing, but Facebook, it looks like it's going to continue to rally. We don't know, okay, we don't know, but like I said, as long as this area of supply is in control, we just can't do anything, because we could have prices dropping like on Reliance, okay, like it did here, and then because you were very impatient and did not wait for the monthly area supply to be eliminated, you would be in a loss. Okay, just wait for the imbalance to be eliminated before you pull the trigger. Okay, because that area of supply could hold, and then you would be surprised. And okay, okay, so good. Any more questions about Reliance or Facebook? Anything else about this one? Okay, no questions. Let me try and see if I allow participants to rename themselves. No log meeting, clear all feedback. I don't know where this setting is, so I can allow you to read. Okay, maybe it's in the setting for the original session, so missed that one. Okay, no problem. I will try to be better on the next one. So next one, okay, is this is one request by Troy. So any questions about this one, Troy? Because you're still there. Troy, no, I'm waiting for 3 monthly demand to be or 3 months monthly. What? Because you are not specifying if it is a demand or supply. Troy, you're expecting 3 months area of demand. This is 6 months. Okay. Strength of the departure is weak. I was looking to take a long-term longs on this one, a confirmation. Regardless, I wanted to get your thoughts on this one. Okay, supply, perfect. So, what do we have on this one? So, if we take a look at the 6 months time frame, this is a little bit of a mess, okay? Because we have super strong bearish impulse. There should be an area supply there on the 3 months, probably on the monthly and the weekly for sure, okay? This has been eliminated. Very, very unclear price action for longs right now, okay? So we also have on the monthly a very strong impulse. So after a very strong impulse that ended up creating this area of supply, we are expecting a bigger retracement, as simple as that, because this is supply and demand at work. It means, what I'm trying to say is that if the price of the underlying stock here was very expensive it was the most expensive price ever, okay, at $84 more or less, and now it has dropped to $40 and is half the price. What do you think? Someone interested in this stock, if you do the analysis of this stock and its fundamentals are like sane, I mean, they've got a nice potential earnings and long term and all that, it just suffered the contagion of the COVID fear around the world, people getting rid of their positions and then professional traders buying at half the price. Okay? So what would you do? What would you do if you are interested in this stock and it is now at a bargain, less than half the price, you buy it. Troy, yeah, you said that. You buy it. As simple as that. I mean, that's the dynamics of supply and demand. This is just very cheap. It's like you're waiting for, you want to buy the new iPhone, and then the new iPhone number 12 is like $1,500. What do you do? Why don't you just wait? Wait, because in 2-3 years' time it will be like $400-500. You want to have the latest phone, you have to pay the price. Okay, that's it. I recently bought a phone for my couple because her phone broke. It was a Nexus 5P. We are Google people. Okay, we don't like iPhones or Mac phones, and I purchased for her Samsung S8, which like 3 years ago, something like that, was like 1,200 euros. And I bought it for 242 euros last week. So you want to have the latest new phone? Great, pay the price. You want to have a good phone at a bargain? Wait for a couple of years or wait for a bigger retracement, and now you have opportunities to go long if you've got the money to buy this stock. Okay? As simple as that. I mean, do we have any entries over there? Well, probably we had an area of demand over there. Troy will tell me if this was an area of supply. I don't want to do the analysis, the chain analysis on the left and all that. I don't want to waste time doing that. But it looks like it could be a strong area of demand with several ERCs. That could have been the entry if this was supply on the left. Okay, if this one was supply on the left, then this is demand and the entry. And potentially price, there's a lot of room for price to keep on dropping at least to this area of supply and even higher to the monthly area supply located at around $75-76 per share. Troy, yes, because I'm long on this one, when the price was at 49.89. That should be 49.89, something like that, over there. Yeah, over there, and then it gapped up. You know a little bit of the company, so maybe this company's fundamentals is just great, and it's supporting that. Supply and demand, there's a bigger time frame area of demand, I believe. I'm not sure if there was an area of demand on the 12 months. Let me check it out. Yes, there is an area of demand on the 12 months in control. That is giving us support to buy the stock. So you've got support of a bigger time frame to go long. And also the dynamics of price, okay, context is telling you that after a very strong bearish impulse, we're waiting for a bigger retracement. And on top of that, you've got the support of a bigger time frame area of demand. Make sense, everyone? Does this kind of analysis make sense? It's always the same thing. Always the same thing. And I could show you not dozens, but hundreds of scenarios like this that are playing out in the last month. Hundreds of them. Hundreds. Just load every single stock with enough volatility and liquidity, many of them, hundreds of them, and look at the 6 months, 12 months, 3 months time frames. And you're going to be surprised how these imbalances are playing out. I mean, I don't need to prove anything. Just look at it. Look at it. And you will see it by yourself. I'm not choosing these examples on purpose. They are being commented and analyzed in the trading community. So, okay, Troy, let's go and cover the second one that you suggested, CSX. That is a railroad transportation company. So, this one, we've got the 12 months area of demand over there. We've got 6 months area of demand eliminated. Very poor area of demand, only 1 year. See, overshot. This is very common, overshooting the level and then rolling again. Okay, so on this one right now, only, shorts and longs are possible. Longs obviously down there, very clear. And right now we've got an area of supply on the weekly in control. Well, it is not. It is a failed ERC, so supply is over there. So this is a scenario. This is very common It is described in the wow lesson, the possibility when an area of an imbalance is overshot. This is very common to have wow trades. Sometimes I will do like this with the lines. Okay, that doesn't mean that there is an exact trend line like this. Okay, I wouldn't connect it to that, but I'm just looking at the CPs and peaks and all that, and the trend line is broken. Okay, there is an area of demand over there, and probably an area of demand over there as well. Okay, so counter trend longs in this scenario, but given the fact that there are many other stocks, okay, that have strong areas of demand on the 6 months and 3 months in control without being overshot, what do you think I would tell you about this one, Troy? What am I going to tell you? Anyone? Can you read my mind? Oh, short on weekly supply on confirmation, correct, Laura? On most of stocks, correct. Okay. No, I'm saying, Troy, 3 months. Imagine that we have many stocks like we are going to see now AAL on O. Okay, that's not the correct one either. But we've got, okay, Caterpillar. No, that's not another one. Okay, let me see. I'm gonna look one of them. One sec. No, one sec. IB. Okay, this one. Come on. This one. IBKR. Okay, Interactive Brokers, the broker that I am using to execute my trades. Okay, 6 months area of demand. What I'm trying to say, Troy, is that let me do this. Okay, so you've got the IBKR. Okay, let me, how do I do this? Okay, like that. And then here I'm going to populate that time frame with the last one, CSX. Okay, good. So that area of demand was overshot. So there are hundreds of stocks. Only on the watch list that I share with you all in the community, there are like 75, 80 or more stocks with these strong areas of imbalance in control. And they are playing out nicely. Okay? So what do you think I'm going to tell you? I mean, focus on Interactive Brokers or focus on CSX where the imbalance on the 3 months has been eliminated? Yeah, exactly. IBKR. Matt, Troy, correct. So it is clear this one is being respected. Not only that, but this one on CSX, it's a 3 months area of demand, whereas this one is a 6 months area of demand and a 12 months area of demand. Okay, sorry. So this one I'm going to kindly swipe it to the left. And this one I'm going to say, yes, I'm interested in this one. And that's the kind of analysis and behavior and attitude that we should have when we look at the charts. We should be cold enough, okay, cold enough to say, no, this one I'm not interested. This one, yes, I am interested. Okay? Yeah, kindly, Troy. And that's the way it is. So this one on CSX, if you want my advice, Troy, you ask for my advice, swipe it left and focus on Interactive Brokers, IP, Caterpillar, MasterCard, Visa, Facebook supply is eliminated, on LB brands, on limited brands, on many of them. Okay? Many of them. So this one no, this one yes. Does this mean that this area of demand is going to play out nicely? We don't know. But somebody, I don't know who, but somebody in the community, okay, let me pull it up a sec, because somebody in the trading community posted this potential trade a few days ago. I'm going to try and find it so you can take a look at it. Okay, so Let me locate it because there was interactive brokers. Somebody said that. There it is. I don't know, it was Wolfgang or Eric that posted it. There it is. And okay, it was Optimus. I was saying 12 months demand in control, 3 months demand in control, okay, monthly demand in control, longs and years of demand. He said, I want to go long there, 2 years C's, blah, blah, blah. Then I updated the analysis today or yesterday, this morning at 8 a.m. Okay, and the daily area of demand is already playing out. To control. This is the kind of thing that we want to do. That's why it's great to have traders contributing. Okay, Optimus said that, and some of you, like Wolfgang and others, and Eric, are along this one. Will this play out? I don't know. But this is the area of demand. Okay, over there, 12 months area of demand in control, 6 months area of demand in control, and I'm going to do this IBKR. Okay, no IBM, no IBKR. So that's the imbalance already in control. Okay, and it is right at the origin of the move here. And if this is supply, then we've got weekly average demand in control. Let me see, because if this is demand, yes, it is demand at all-time highs. So we've got weekly supply, very bad weekly area of supply. Let me clean the chart, clean up these lines. So look at the impulse. This is based in structure, okay, not a single ERC, overshot eliminated, demand in control. So we've got now weekly area of demand in control, okay, 12 months demand in control, 6 months, 3 months, monthly demand in control is over there, not painted, weekly demand in control, daily demand in control. So this is the trade. Make sense? Does it make sense? It's not only the great thing about the community is that not only me but other traders, and I wish that many other traders contributed, because if you did that, your learning curve would improve so much and so fast, incredibly fast. But I can't force you to do it. So let me read CK. Is there a way of drilling down your time frame to 1 hour 30 minutes for tighter entries and stop loss? Yes, you can do it. Up to you. I'm not drilling it down. I'm just trading the imbalance, and that's it. I'm buying time because I'm buying options, so I don't care about stop loss because I don't have stop loss. But if you are like here, this level is very wide on the daily, so you could say I'm going just to take half of it. And even if you took half of it, you probably would have missed the level because this one is like almost a 50%. So you would say, okay, I'm gonna drill the entry down to there. You miss the entry. Obviously, the stop loss should be there. So the risk would be like $36 to 33, okay? So it would be a $3 risk, okay? Multiplied by 100 shares, that would be a $300 risk on this trade. Make sense? CK? That's the risk, $300. Okay, if you do that. But if you drill it down, I mean, there are two scenarios, two outcomes when you drill an area down. I mean, you could obviously, if you plan your trade right at the proximal line, like some trades did, then you would be already in the trade. Price penetrated the level like a couple, $3, $4, and then it rallied again, and you are in the trade. But if you drill the entry down, you are missing the trade. So sometimes you will get a better entry than someone that is planning at the proximal line, and sometimes you will be missing the trade. And you have to accept that. There's nothing you can do about it. Make sense? All good, CK? There's no way that you can avoid that. If you decide to drill it down, and even now, if you decide to go to smaller time frames, like say like the 1 hour time frame, okay, 1 hour time frame, then you take a look at the 1 hour time frame. You could say, okay, great, it looks like the whole origin. Look at the gap here. Look at 1, 2, 3 ERCs. You could say, okay, I'm going to drill the entry down to this price, like around there. You miss the trade. Okay, a little bit. So you have to give it a little bit of room. Okay, some padding, not only on the stop loss side, but also on the entry side. Okay. Laura, if daily means the trade, no, I mean, you can plan the trade. I mean, you can plan the trade different ways. You can take the whole level, you can drill it down to half of it, you can use the smaller time frames. But the thing is that you should be doing that or thinking. You shouldn't even think about drilling the entry down if you don't have a great setup. Okay, but now we know that we have 3 months, 6 months, 12 months, monthly demand zone, weekly demand zone. Okay, so you can say, okay, I'm going to reduce or normal risk, because the risk should be the same after all. If you are okay, just say I'm not going to risk more than $400 on every single trade on stocks. So this is $3 risk. So your entry could be like there, and you would be in the trade. But if you say no, I'm going to risk maximum $200 on every single trade. So your entry could be there and the stop loss over there, $2 wide. Okay. That's the way it works. If you just can't do that, then you could trade CFDs, contract for differences, or start learning options where you buy time instead of the underlying asset. You do not own the underlying asset, you do not own the stock, but you are allowed to control 100 shares of stock per contract over a period of time. Okay, all good with this one? Yep. Any further questions on this one? Okay, so that's IBKR. So we did that already. I'm going to drag it over there. We also did Aussie dollar. Okay, we did S&P quickly, Nasdaq as well, Aussie dollar. Okay, do you want to analyze Matt, BA, Boeing? Okay, let's go and do Boeing. Boeing, Boeing. Okay, good. So Boeing, there it is. So what happened with Boeing? With Boeing, we had a super strong area of demand, and what happened? It was overshot. Okay? Again, same scenario as we saw before on CSX. Okay? The imbalance was eliminated, okay, but overshot. And the overshot is happening in the context of a long-term uptrend. Okay? So, and after a very, very strong impulse. So Boeing, together with Airbus, okay, are the biggest, okay, aerospace or well, builders of airplanes in the world. Okay, well, the COVID caused this decline, also all these accidents that Boeing, I'm not reading fundamentals, but I know because everyone is talking about the 737 MAX or something like that, that there were 2 accidents and hundreds of people died because of those 2 accidents. So, and this is the decline, this is the loss, but look where price was. I mean, look at that, super strong rally, bearish pink candle, and then the accident happened. So, okay, we shouldn't be buying Boeing so expensive. So supply and demand was telling us no longs. Okay, yeah, the the stock has a funny name, Troy. Boing boing. So, but the airplanes didn't boing on the sea. They just sunk in the sea, unluckily and sadly for the crew and the people inside the plane. So okay, so now what we are expecting right now is that this company is a very strong company. And now, before a few months, like 3 months ago, the stock was worth $380 per share, and now it is 130. It's like 1/3. Okay, so what do you think is going to happen? Troy, Laura, and everyone? What do you think is going to happen? It's going to rally. It's going to rally. No one is interested in right now selling Boeing. Okay, that's why it's losing steam with a bullish engulfing pattern on the weekly. This one is a bullish engulfing pattern, but it's not a bullish engulfing pattern. It's green, okay, but we want these bullish engulfing patterns. We want solid ERCs like this one and this one. We don't want like a basing spinning top candlestick, okay? So we're expecting price to rally. Going short right now is prohibited, not allowed, okay? Potential counter-trend longs. And that was probably, we've got here pause, pause, peak, pause, trend line broken, and we've got right there an area of demand at $107 per share, which is worth a short at the origin of the bullish engulfing pattern confluence. It is a little bit of aggressive trade. I mean, like I said before, if we compare, okay, we compare Boeing with CSX against interactive brokers. Interactive brokers is a yes, CSX is a no, and Boeing is a no. So out of the three, the safest one is interactive brokers. That doesn't mean that interactive brokers, 6 months area of demand, and weekly, and all those areas of imbalance that we already analyzed are going to be cannot be eliminated. And then these ones that were eliminated, prices is rallying and playing out. So that can sometimes happen. I mean, these trades that are a little bit more aggressive can play out, and then the strong imbalances that have not been eliminated are overshot and eliminated, and you've got losses on the high probability one, and you've got winners that you did not take because you swiped these ones left as you were concentrating on the clearest ones. So we just cannot control that. Cannot control that. The only thing we can do is say, okay, I am not interested in trading at imbalances that are overshot, over. So this one left, that one no, that one no, that one yes. Okay, and you play your odds, like Laura said. Okay, you play your odds. So, but if we start having engulfing patterns on the weekly, on the monthly, and all that, this is like the building block of a bigger pullback, bullish pullback. Then you can start thinking of going long, counter trend. But like I said, it's preferable, okay, to focus on this one rather than on this one and this one. Okay? Yeah, you can buy options on BA if you want. They are a little bit expensive though on BA, but now much more cheaper because after such a sell-off, they are much more cheaper. Yeah. So, any more questions about this one? Or any of the others? Okay. So BA is already done. So where are you, my friend? BA over there. Now American Airlines. This is the one that we have right now. So American Airlines, we have priced now again. This is a very, very cheap stock. Okay. But as per the rules, this is not demand, but it is a super strong impulse and it's very cheap. American Airlines was like about $60 per share, and after 3 months is at about $8. So that's a lot, super cheap. I mean, $60 versus $8 or $9. That's a lot. So this is quite cheap. So we start getting new areas of demand and also patterns and all that, then we could start seeing new areas of new possibilities to go along. So here we had the area supply not eliminated, still in control, printed a lower low, and a lower low, and a lower low, so still no opportunity to go long on American Airlines. But I'm sure that this is probably start to to rally again once there are some good news on the US that the skies or the airspace space is open to traffic in some percentage, something like that. And then once that happens and the airlines start flying again, at least in a percentage, then we're going to have people more interested in airlines and cruise companies and all that. Okay. So on all airlines, we've got that bearish momentum, as Laura is pointing out. So we should stay quiet right now on this one. Okay, sitting on our hands, waiting for a clear scenario, because we are having this bullish impulse that was trying to break higher, but just couldn't low, lower low, lower low, higher low, or lower high, sorry, and then printing a lower low. So we've got trailing like that. If we get a strong bullish engulfing pattern over there, and even at least, let me take a look at this one on the 3 months, okay, and on the monthly, we are having a spinning top. Then we want, at least we want the monthly printing a higher high over there and engulfing patterns, and that will give us a little bit more confidence to buy American Airlines. But right now, forget about it. If you ask me, that one, swipe it left and wait for something more clear. Okay? Any other one? Any other? These are all the suggestions. I've got some over here. Okay? So let me take a look at Comcast, for example. It was on my list. So Comcast, we've got on this one, we have the 6 months area of demand in control over there. Okay, price reacting to it. And on the weekly, look at the price action here. Very, very bad. We have already analyzed a couple of supply zones with a high wave dodgy candlestick at the base. Very, very bad. Not a single ERC candle. This is a bearish pink candle, shooting star almost, if it didn't have this lower shadow. And it's rallying higher and higher and higher. So we are allowed to go long this one based on very bad price action on the weekly, expecting price to rally at least to the 45 area. Okay, lots of room. And based on the fact that we have 6 months area of demand in control, 12 months area of demand in control, and very, very bad price action on the weekly. That's great. If we got bad price action on the way down, that's good. If we get a bigger time frame area of demand in control, because this bad price action is going to be easily, it is usually, it's not the correct phrasing, is usually going to be eliminated easily. Not always, but that's what usually happens. Okay, makes sense? Troy has one more ticker. If you have Forex as well, okay, when I look at Forex, it doesn't really matter because the rules apply to any asset, any market. So let's take a look at which one, KBM. No, or KMB or KBM. Kimberly Clark. That one, Troy? So look at this one. 3 months, monthly. So this is what we have. This is going to be pretty quick. I mean, we've got another 6 months area of demand. All-time highs broken. Consolidation away. Losing a sting. COVID. Hey, COVID. Here we are. Price rallied. So this is COVID. COVID is the trigger point. The thing that the market needs to create fear and then allow price to drop to a bigger time frame of imbalance, demand in this case, and provide buy opportunities long-term at a very cheap price. That's what COVID-19, that's how it could be redefined. It is obviously a virus, a deadly virus that has shattered the world and sent us in lockdown and all that, but it is the trigger that the stock market needed to create fear and provide high probability long setups buying very cheap stocks that before were very, very expensive. That could be the redefinition of the virus. It could have been a virus, could have been I don't know, a terrorist attack like the ones on the Twin Towers in New York so many years ago. Anything, okay? That's the trigger that the market needs for a pullback to buy or to sell. Okay, sadly, it was a deadly virus that is killing thousands and thousands of people. But the professional traders and ourselves as traders, we just trade imbalances. So was it the COVID or was it, I don't know, Saddam Hussein who came from the death? We don't know. We don't care. We just trade imbalances. Okay? Good, Troy. So this one, monthly area of demand is in control over there as well. Okay? We've got 3 months area of demand in control, 6 months area of demand in control. So longs, 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 longs. Okay? That's what it is. We've got now a weekly area of supply in control over there. Well, it's not correctly wrong. Okay, so right now, no longs allowed. Why? Because we have supply on the monthly, bearish engulfing pattern on the week, supply on the weekly. This is not supply, just engulfing. Bearish engulfing pattern, bearish engulfing pattern, bearish engulfing pattern on the monthly. So buying right now, no. Buying was possible down there, but right now the long movement has already played out. So no long opportunities. If you are biased longs, as I am right now with the bigger time frames, areas of demand in control, and with the indexes rallying higher, eliminating areas of supply in the weekly, potentially, Nasdaq did it already, okay? The weekly area of supply already, S&P could be eliminating that area of supply anytime soon, we don't know. But we've got a long-term long bias. We need strong, very strong new areas of supply in order to go try shorts. Okay. Troy, yeah, 9/11, I was able to see the smoke for the towers from where I was living. I just started to high school. Yeah, I remember the day I saw that. I mean, I was in a big mall in Spain called Corte Inglés, which is the English cut, big stall, okay, mall. And I was there with a friend of mine. I wanted to buy a video game for the new Xbox or something like that. And then we were watching on TV, lots of games and all that. And then we saw the planes crashing against the towers. And, you know, since all the games are so vivid nowadays, and the date as well, we thought it was a video game. I can tell you. It wasn't in the end, but we thought it was a video game of a plane crashing against a tower. But sadly, it wasn't a video game. It was a real thing happening in New York. That was my experience with the Twin Towers. Okay. So KBM Kimberly, okay, Clark is already done. Okay, so any others? Index, Forex, crosspair, anything? So let me take a look at IP. You've got some recommendation or some request, please type it in the chat box. So this one, IP, this one looks a little bit tricky, isn't it? Because look what we have here. We've got supply eliminated, okay? We've got now bearish engulfing pattern and a bearish engulfing pattern and a one over there, and then price is starting to react over here. So why is it reacting to this? Well, because we've got an area of demand over there on the 6 months time frame. Sorry, where was it? Did I draw it? Well, that's the 6 months area of demand. Probably a bigger time frame area of demand. Yes, correct. So this is again, forget about that this is a 12 months area of demand. Okay, forget about it. Okay, imagine there is nothing here. The watermark, which I believe should be somewhere on appearance. Okay, watermark, it doesn't exist. So if I tell you this is time frame X, how much time is every single candlestick? We don't know. It's just time. Okay, time. We don't care. Okay, so these are all-time highs. Eliminated right there. But right there, this is very, very common to have investors testing the all-time highs to see if there are bigger investors trying to get out of the trade and all that, blah, blah, blah. And look at that. Bullish impulse, not able to consolidate away. It tried to hit the area, to reach the area of demand right there, but it just couldn't, okay? It couldn't. Almost did, and it couldn't. And then it was 1, 2, 3, 4 candles later that it did. These 4 candles, we know that it is a 12-month area of demand, but it doesn't really matter. It could be a 4-hour area of demand, a new IPO in a stock, new stock like NIO suggested by Mohammed, which is a new one, okay? And I believe that I am long on that one, on NIO. And that one, so we have, this is 12 months every month. It could be a daily, a new stock that has been trading maybe for 2 months. And it just try to rally, but it is not a daily time frame. It is a 12 months time frame. Okay, so go to settings and restore the watermark. So now we have the 12 months area of demand, very strong area of demand. Okay, responsible for breaking all-time highs. The impulse was there, but it wasn't strong enough to consolidate away. So as per the rules, we shouldn't be looking to go long there. And there, yes. So now the only thing we can do is to start thinking of going long. Make sense? How this analysis is done. I mean, how the consolidation away, the strength of the impulse, and all that. The bearish engulfing pattern, trying, after the bearish engulfing pattern, we are trying, or we're expecting price to retrace to the origin of the move, and that is what exactly happened. So now we've got a monthly downtrend, a 3 months downtrend, the 6 months probably in a downtrend, and the weekly is in a downtrend as well. But the impulse started right up there. We've got a weekly bullish engulfing pattern, probably an area of demand over there. Yeah, because we had the trend line break. Sometimes it doesn't work. Trend line break, origin of the move, daily demand zone. Okay, this is IP. Make sense? Any questions about IP? All based on this imbalance. And also that there was a very strong bearish impulse. And after that, it tells us that IP International paper, okay, is too cheap. It was 3 months ago, it was like around $47 per share, and now it is at $30 per share. $16, $17 cheaper than before. Okay? So, good for longs. Okay, now let me read Amir, CK, the suggested, okay, pound yen. Then there was another suggestion, dollar versus Korea, another one, South Korea. And then Ethereum, that's Troy. And NIO. Okay, let's try to do this. So let's start with pound yen. So what is the question about pound yen? Because it's being analyzed, was analyzed, I think, was updated today or yesterday, also in the weekly analysis during the weekend. So any particular question on pound yen? Because this one, I don't know who suggested it, because it has no alias, it has your name on the alias. So I don't know. This is analyzed, was analyzed in the weekly video analysis like 48 hours ago. So going over it is just a waste of time, I believe. Okay. So unless you have a very, very specific question that was not covered in the weekly video analysis, I suggest you that you watch the video analysis, okay? It is explained there, or you can ask in the community as well. But I'm just gonna take a look at it, okay? 12 months demand zone in control, 3 months demand zone in control, okay? Bigger retracement expected to the weekly supply and the monthly supply zone for counter trend longs. That's the analysis. It's explained in the community and in the video analysis, okay? So this one, I've never ever looked at this one. Okay, Korea versus the dollar. Okay, good. So this one is not an all-time high, 3 months bullish confluences, monthly uptrend, trend line break, supply over there, then supply over there, demand over here. So we've got a weekly uptrend. This is supply with the trend line connecting this valley with this valley, origin of the move. Supply has been eliminated. Okay, so this one is the one responsible for eliminating that area of supply. So we have a monthly and a weekly uptrend, so only longs are allowed. I can see an area of demand over there that a similar one has been created on many other dollar cross pairs. Why is that demand? Because we had a trend line, this is a valley over there, and a valley down there, trend line breaks, supply created. Remember that the weekly and the monthly are in an uptrend, so only longs are allowed. Super strong area, 1, 2, 3, retraces after 4 days, and that's the trade, eliminated over there. And then we've got supply over there, eliminated by demand, we've got another area of demand over there. That's the analysis on this one. So what can we do right now? We are expecting a bigger retracement over here. Look at the monthly pink candle. We already saw something like that on some analysis, bearish pink candles and all that. So monthly is in the middle of a retracement. So going long now, again, it's very, very aggressive. So waiting for a clear scenario on this one. Okay? Amir, brilliant analysis, very useful. What will the target for longs on? Well, I've just said there are no longs right now, so no target. There was an area of demand over there that provided like 3 to 1 over there. And right now we've got a brand new area of demand, but only 1 ERC. So nothing. No trade possible on this one. Okay? Make sense, Amir? Why no longs right now? Okay, good. Perfect. So, good. So next one, let's take a look at Ethereum, the cryptocurrency suggested by Troy, I believe. So, cryptocurrency. This one is 3 months area of demand, almost in control. We've got the trend line broken, peak broken, monthly demand in control. Okay, that's what we have. Monthly demand in control, so longs in the monthly sequence. So on the weekly, we've got here a peak, another peak, another one, another one. The latest two connected. The origin of the move is demand. So we've got demand eliminated, supply created. So we've got the supply area right at the top, the origin of the move. We still have, Laura, longs and years of demand on the daily, but right now, nothing available here. Why? Because we had here, this is demand similar to Bitcoins that was eliminated, because this is demand. We have this area of demand eliminated. Oops. Then we have this area of demand created, only 1 ERC, eliminated. Then we have supply here, eliminated, demand created with 2 ERCs, but still have that price action over there. We want that out of the way. Okay, we've got supply over there. If this is eliminated, then pull back to demand and then rally. That's the plan on this one. Okay, it is too late right now. Okay, once price was down there on the daily and the weekly, then we could have tried to ride this one on the 4-hour maybe, or even lower time frames if you are trading them. But right now, not possible. The next one is suggested or was suggested by Matt, NIO. Okay, NIO. So this is the one. No, I'm not long on this one. I'm long on another one, which is IQ, not IO. IQ. Yeah, on this one I am, but not on NIO. I thought it was. It is on my watch list, but not possible to go long this one because supply is in control. So on this one we've got this is a new stock. Okay, only 2 years and 2 months or 5 months old. Okay, after a very strong sell-off, we get a 3 months bullish engulfing pattern, and as per the engulfing lights lesson, after a strong impulse, we get our building block. Okay, engulf. That means that shorts, no way, my friend. Make sense? No way. No shorts. That's how it works. As simple as that. So you see now 3 months time frame. Okay, great. No shorts. Can we think of longs? Counter trend. Now it is the right moment to think of counter trend. So what do we have here? All-time lows. We've got an area of supply eliminated already. Okay, overshot. Consolidation away with this candle. All these candles are the consolidation away for this area of supply. 1 ERC only. Then price continued to drop. It created another area of supply, eliminated as well, and we've got demand. Okay, so we've got one area of supply eliminated, 2 areas of supply eliminated. If you see this chart, you are going to say this is a downtrend. No downtrend. This is an uptrend as per the rules, and that can be a little bit contradictory. When you look at it and say, wow, how can this be an uptrend? It's been dropping for ages, and now just 2 years and we've got an uptrend. No way, these rules make no sense. They do make sense, and if you apply these rules, you're gonna get a lot of trade opportunities because they work. Okay, and this is happening also. Why is this happening? Because after, okay, like you know, NIO, NIO. Why is this not working? NIO. Okay, so after this, we have to put all this into context. Okay, after a very strong sell-off. Okay, after a very, very strong sell-off, what do we expect? A bigger correction. Okay, because it's just too cheap. I mean, how are you going to sell NIO when the stock is worth only $1? What are you going to sell it? At what price? Silly, stupid. I mean, just makes no sense. So you have to think of, change your mindset and say, okay, this is very cheap, blah, blah, blah. New areas of demand, that's where we want to go long. Or just buy the stock and spend like $100 per 100 shares, okay? $1 per share. So down there, so you buy 1,000 shares, $1,000. So it rallied and you made $6,000. You made $5,000. That's very easy to say right now, but there was no entry. The entry is right there on the monthly, but it gets down there. You don't need to buy options. You don't need to buy time. Just buy the underlying stock, and that's it. Like it happened on ACB. Many of you took, okay, went long on this one. Okay, you went over there. You have waited for a few months, and now price is starting to rally, creating a new area of demand. Okay, it was a split, like a 7-to-1 split or 12-to-1 split. Before the stock was like $1 or $0.5, and now it's at $18. Okay, strong area of demand. So what do? I mean, you just, now it's a little bit more expensive because some of you bought this stock for $1 or something like that. Now, if it drops down there, it's gonna cost you like $700 just 100 shares, unless you buy less than 100. Okay, so it is looking good for longs. Okay, let me read your questions. Okay, last if possible, WLL. I think that's an oil related stock. Probably, I'm not sure, but it sounds like that. WLL. Okay, so we've got ACB already. Okay, did that. NIO. Let me finish this one. So only longs are allowed. We've got a strong area of demand over there. PT didn't drop, but if it drops, that could be a great opportunity for longs. Okay? Any questions about NIO? Okay, pound yen, somebody else. Okay, dollar versus the South Korean. Okay, done already. Okay, good. So WLL. Yeah, Whiting Petroleum. I don't have that one on my watch list because there are so many and this one's so cheap. I don't know what is the market cap of this one? That one. That's why I don't have it on my watch list. Yes, $93 million. It's nothing. Well, it could, I mean, $93 million is a lot of money. I wish I had that on my bank account. Okay, but I don't have it. So, but if you take a look at ExxonMobil, $193 billion. You take a look at CVX, Chevron, 174. So am I going to be trading WLL where there's no liquidity at all? No way. I'm not looking at that one at all. Yeah, it is very cheap. Yeah, it is very cheap, but is it going to move? Or once you are in, are you going to be able to exit your trade? Because if there is no liquidity, you could have a great trade over here. Okay, and then you try to exit and you just cannot exit because there is no liquidity or you are paying much more. I mean, that happens a lot. Okay, so I'm not looking at this one at all. I mean, I want $2 billion market capitalization in order to even look at the asset, at the stock. Otherwise, I'm not looking at it. And even with that filter, there are hundreds of stocks. So I'm not going to look at a $93 million stock, no matter how cheap it is. This is nothing. This is a penny stock that is, I mean, valueless, has no value at all. At all. So can this play out and you can make money? Probably. But this is a very, very risky trade. You could be in the trade and not be able to exit the trade for a long time. Forget about it. I mean, I'm not doing that. I'm not doing this kind of trade or analyzing this kind of assets. Okay? Why would I do that? If you've got ExxonMobil, okay, ExxonMobil with the 12 months area of demand in control, again, 6 months area of demand control, I mean, and $195 billion market cap, I would be looking to trade that one, not the other one, not WLL. I'm not looking at trading this one. Matt is saying hedge funds don't touch anything below $10, and that's a very wise decision. Very wise decision. NIO, that's very cheap. Okay, maybe you are interested in this one. I've got it on my watch list if it gets down there, but like you said, it's very cheap. It's a penny stock and anything could happen, but this one has some market cap, I believe. Almost 4 billions. Nothing to do with 93 million. That's nothing. So if I had to choose between WLL Whiting Petroleum and NIO, I would definitely go for NIO, no matter what circumstances. Make sense? Mohammed? Good? Any other assets? Any other suggestion? Okay. So I've got some here on my list, but we still have like, let's say 5-10 more minutes. So if you've got something else to analyze, I'm gonna go over it. SPY, we already did that one. Matt, we did S&P, which is the same. SPY is the ETF, so it's just the same thing. We've got SPY should have the weekly area of supply and control, or almost in control. There it is. So right now, no longs. But we've got the 12 months area of demand and controls, 3 months, and all that. Nifty, we already saw that during the week and during the weekly analysis. Yeah, strange name. We did that already. This analysis is 2 days long, 2 days old. 12 months, 6 months area of demand and control. We want new areas of demand on the daily, expecting price to drop down there to the weekly impulse, and from there, longs and years of demand. That is what is analyzed or was done in the weekly video analysis. Okay, if the weekly video analysis was a little bit older, but it's just 2 days old, I mean, I suggest that you watch the video analysis. Momentum going up, grinding up on almost all stocks, but we trade imbalances. Exactly. We'll have to wait, patiently wait, and if we wait, they are going to happen. Okay, they are going to happen. On Facebook, we could have that area of supply eliminated, like we said, on a monthly, but we have to wait, because on Netflix, it happened. Okay, on Netflix, that weekly area of supply over there was eliminated, and a new weekly area of demand was created, but no pullback. Almost did pull back to the strong area of demand on the weekly 1 year C, but much wider than the average, and 3 years is on the daily, and it didn't. And now when you look at the daily here, very bad price action going long now. Okay, you could say, I'm gonna trade the 1 hour time frames. I'm gonna trade, okay, let me take a look at the 1 hour time frame here. I'm gonna trade here, there. That's noise. That's noise. The big investors initiated the move here, there, not there. This is noise. Okay, so we have to patiently wait and get rid of the noise and focus on the clarity, on the light. And that's where we are. That's what we want. It didn't retrace. What can we do about it? Nothing. Okay, that's Netflix. And we could take a look at many of them. I mean, any other? Indian stock maybe? Because there are some Indian traders here. We don't do any retracement to support, Laura. To imbalances, to demand, yes. Berkshire Hathaway, okay, that's BRKB, but longs because we have areas of demand in control. So that one we've got 3 months area of demand in control. I know this by heart. 3 months all in demand in control, very weak area of supply over there, bullish engulfing pattern, daily demand down there. Price almost reached. This is similar to a IBKR, but on IBKR it did retrace, it did not retrace on Berkshire Hathaway. Okay, but this one looks a little bit more tricky. Why? Because we've got this monthly bearish impulse there, not looking that good as many others. On that one, Hull, I don't know, HUL, first time I see this one. Seattle, FX Spot, no idea. I mean, this one, are you trading this one? Like live, yeah. Okay. Hindustan or that. So that is not Indus, and it should be this one. Yeah, Hindustan Unilever, but you said HUL, and that one wasn't the right one. Okay, good. So this one, I mean, I'm just going to ask you something here. Just look, I mean, let me do this. And just, I'm willing to accept your suggestions. What I'm going to say here. This is any time frame. What is happening here? Lavdia and anyone, what are we expecting here? We have discussed this scenario hundreds of times and a few times in this webinar. Retracement, Laura, exactly. Bigger retracement, Daniel, Laura. Pin bar bearish. Not only pin bar bearish, I mean, not only the pin bar. I mean, we are trading imbalances. The pin bar is just price action that could be supporting and or negating imbalances. Okay, after a very strong rally, we are expecting a bigger retracement, and price action is showing us that that bigger retracement might be underway. Okay, that's what price action is telling us. So you want to go long here, right there, when price is doing just that? Haven't you seen enough imbalances on these stocks? How price retraced all the way down? No way. I mean, I'm not gonna take. I mean, unless maybe you are an intraday trader and you are trading 1 hour or even smaller time frames, then probably. I mean, that's gonna be dozens, if not hundreds, of trades on many different strategies to go long and short of there. And if you are trading options, there will be lots of opportunities with different trading strategies. I mean, but we're not discussing that. We are analyzing high probability imbalances, and the high probability imbalance is right there. And this time frame, no matter what watermark we have there, or even if it is the H4, price action is telling us that this is what is bound to happen. Will that happen? I don't know, but that is what usually happens. Okay. So Troy said something personally with stocks, even more so with options, trading the higher time frames and have the patience is more worth it and less stressful from my experience. That's what he said. Or yes, Laura, or confirmation after a bigger retracement. So if it happens that price drops down there and there is maybe at the interchange zone we've got a 3 month area of demand and all that, then we can start thinking that maybe price is going to rally a little bit again. But if we take a look at, okay, this one over here. Okay, so we've got last bullish impulse that was not able to consolidate away. Look at the 6 months time frame, no consolidation away, bearish pink candle. And at the end of the 6 months period, we could have these close. Now it's open. I mean, it's not, the candle is not closed. In about 1 month and a half, this close could be right there. And the candlestick end up like filled candlestick body, black. Okay, so no longs there. Make sense? Matt, the anti option at the money and all that, that's something you have to decide. I mean, at the money, in the money, out of the money, that the more out of the money, the riskier it is, the cheaper it is, but the more price has to move with you and all that. So you have to decide which one you want to take. I mean, at the money is fine. At the money is fine, but you have to test all that. What's that? In the zone, yes, all this. We are trading zone, so in the zone. So that's what we are expecting. Okay, price action is telling, I mean, the origin of the move is there. And could this take 2 years to drop? Well, I've seen many imbalances like this that just took 2 months with the COVID, only 2 months. So since there are many other stocks, why trading in the middle of nowhere when we're expecting a bigger retracement? So if we start seeing bearishing of some patterns, daily wow shorts, weekly areas of supply, blah blah blah, and all that, like this one over there, daily demand eliminated. So we've got a daily area of supply. So we could start thinking of going short. Okay, that weekly area of supply, right at the origin, that could be a nice potential trade for shorts. After consolidation away, eliminated that area, blah blah blah, supply zone in the making. So you could start thinking of going short. Longs out of the question. I mean, no way longs. So now comes the question, should I be thinking of going short? That's where you have to decide. You have to decide if you want to go short, counter trend, or just wait for a bigger retracement or focus on other stocks that are clearly trending up or down. Okay, but my recommendation is that you do not start chasing the trend. And if you want to take on the trend, I mean, focus on super strong levels, stronger than those created in a clear trend, because you are trading against the trend. So you should focus on the levels that are stronger, minimum equal or as strong as the imbalances created in the trend or with the trend. When trading against the trend, you should be focusing and choosing imbalances that are at least as strong, if not much stronger, than the imbalances created in or with the trend. Make sense, everyone? And I believe that's a very, very logic approach. I mean, it's nothing, I'm not inventing the wheel. I mean, that's pure logic. Okay? So that one was Hindustan Unilever. Come on, I'm going to add it to the watch list because we covered that one. And okay, I think we are done, but well, okay, one more, and then we are done. Okay. Troy, higher time frame areas, we should be waiting for wows or new levels to be created on your entry time frame. Yes, exactly, Troy. That's what we want. The wow trades are very, very powerful when there is a bigger time frame imbalance in control. And if the bigger time frame is trending, even better. Okay. So one more. So let me take a look at JD, okay? Because that one, I was initially short on this one. Maybe you will remember, or let me pull it up. Together with Jack Powell as well, I think he took it as well, but I exited very early because I saw price action not doing what it should be doing. So let me take a look at it. And you were as well short on that one, Brian? But I exited with a very small loss because I exited it very, very soon as I saw price action not doing what it had to do. Okay, so where was it? Yeah, we were expecting their price. I was short over there. And then a few days, like, I don't know, 14 April, like, yeah, a few days later, I said, no way, I'm getting out of the trade. Why did I wait or I exit the trade? Let me explain to you. Brian saying waited too long and got beat up. Did you close it, Brian, or you just had a loss on that one? So you close it, okay? So that was an area of supply right there in the 6 months. Let me, okay, I'm gonna use that one on the 6 months. This one is gonna be the 3 months, that one the monthly, the weekly, the daily, and the 4 hour. Okay, so I was short like around, I believe it was like in this area over there, something like that over there. Oh, something over there. I'm not sure over there. And then I started to see, okay, the weekly, the monthly pink candle, the bullish engulfing pattern on the monthly in the making, and I say, well, this is not going to, I mean, that's what I thought. I mean, and I was saying, no, this price action over there is very weak, but the location was pretty good, okay? It was very well located. It was there, okay? But I saw that bullish pink candle engulfing pattern in the making, and price action trying to rally high. I said, no way, I'm getting out of this trade. And I don't know if it was there or there, but a bullish pink candle was being created, and I said, no way, I'm gonna exit this trade. Of with a small loss, I don't know, it wasn't very much really. And luckily I did, because look what happened now. We've got a new area of demand will be confirmed in 3 months at the end of this quarter, at the end of June 2020. Very strong area of demand over there. On the daily, we already have a daily area of demand. On the monthly, we're going to have one maybe at the end of next month. And on the weekly, we've got a strong area of demand with several ERCs. Okay, stay safe, Matt. And now we should think of going long instead of going short. We went short, was not a good idea. We exited soon enough not to have a great loss, small loss. And now we waited and waited and waited. No supply created here, no strong supply, nothing in the daily to support shorts. And now we've got strong demand that supports along with the weekly and uptrend, the monthly and uptrend, the 3 months uptrending, and everything bullish. So now is time to switch our bias and start thinking of going long instead of shorts. Make sense? All good? Okay, good. So that was the last one. It was almost 2 hours doing the analysis. Hopefully now this is helping you locate new imbalances and learn to have more patience and wait for the right setup, because waiting is key to succeed in this very difficult, or the most difficult or more challenge that you will, at least that I have ever started, initiated. It's super complicated. So wait and wait and wait, and you will have a chance if you are patient enough. And that's it. Good evening, everyone. I'm not long on gold, Troy. Thanks a lot, Amir, and have a great day. I will be uploading the webinar to the community and sharing it with you for you to see it again if you want. Have a great night. Bye-bye.